Hi, this is James Shug with Westpac London's end of day report for Thursday the 14th of June. It's actually about 4 o'clock in the afternoon, but we've got a fair idea of how markets have been behaving today, and that's basically struggling to continue selling off. There was some bad news, certainly. Moody's downgraded the Spanish government another 3 notches, taking them to 1 notch below where Fitch downgraded Spain to last week. We had an Italian debt auction, which saw all of the debt put away into the market, but the yield, for example, on the 3-year bond, 4 weeks ago, it was at 3.9%. A month later, it cost them 5.3% to borrow for the 3-year term. So a 140 basis point increase in the 3-year part of the curve for Italy. Just demonstrating how investors are becoming less comfortable with Italian government debt. A lot of the foreign holders of Italian government debt have sold off their holdings, and we're seeing domestic banks increasingly participate at high yields in those auctions, as has been the case in Spain. The Greek elections, of course, held on Sunday. There's no official opinion polls now. However, markets actually did manage to post gains, particularly led by initially the Greek banks, up something like 20%. On reports, not confirmed, that the pro-austerity, pro-bailout parties were doing relatively better. And if that's the case, if we do see a result along those lines on Sunday, then that will go some way towards diminishing the near-term prospect of Greece leaving the euro, at least in investors' eyes. Now, our view is really it doesn't matter what the result of the election is. The bailout for Greece is going to have to be reworked. It's driving the economy into the ground. The austerity there is. The bailout itself is not enough. It takes the form of debt, which is not the right way to sort out the problem, giving a country that's got a debt problem yet more debt. Nevertheless, markets were positive on that story. Also, weaker US numbers, well, not so much weaker, but we had initial jobless claims rise 6,000 to 386,000 in the latest week. There's now a clear uptrend in place since February there. The inflation numbers were benign enough, with the annual rate 1.7%, the lowest since the beginning of last year. The core rate was 0.2 in the month, 2.3% over the year, just off the recent 2.4% peak for the core annual rate. But that inflation and labour market picture, the labour market in particular, given that there's a range of indicators now that point to a softening job story in the US since earlier this year, fed into this notion that there's more of a propensity on the Fed, on the FOMC, to countenance further easing. Now, we had Tim Geithner, the Treasury Secretary, say that 2% growth in the US ain't going to be enough to generate much jobs growth. I think he's right, but that's really where the economy grew in the first quarter, and the second quarter that we're currently in looks like being even softer than that. So the case does seem to be building for further Fed easing. Whether or not it gets announced next week, or we have to wait until later on in the third quarter, remains to be seen, but certainly markets have been supported by that today. The European CPI was confirmed at 2.4% in May, the core rate there 1.6%, where it's been for a few months now. So, given all that, just heading into the European close, we've got the FTSE in London down 0.6%, the French market down 0.2%, the German market's down 0.5%, the Spanish market's up 0.7%, and the Italian market's up 0.5% today. The Dow is trading at 12,586. That's up 0.7% compared to yesterday's close. So the Fed easing story, the big driver there, but earlier steeper losses in European markets have been pulled back somewhat by that Greek story about the election, and also by that Fed stimulus story. In commodity markets, gold prices are down 0.2%, $1,616 an ounce. Copper prices down 0.1%, and oil prices up 0.2% at $82.79 a barrel. The Aussie dollar at 99.8 US cents. There's been on a bit of an uptrend with equities doing a little bit better as we've moved through the session. All right, that's about it for today. I'll be back again tomorrow with more. Until then, happy trading.